why I took a long here. This move has happened and I'm now going to be able to try and potentially catch the back end of it. I'm coming onto the charts at around where this low is formed. We're starting to see some bullish momentum. We have a lot of imbalance. Fair value gap here, candle price gap here, but we then also have the actual fair value gap itself in the middle. So we have a lot of reason for price to be, drawn back to this. This one here, I did take a win here. So there's going to be two trading windows. Those trading windows, I put them in UK time, whatever the translation is for the win. Obviously, you'll have to sort of work that out as appropriate, but we're doing 0800 to 0900. This is UK time. So that's trading window 1. So I call that LT. That's the London trading window. We then have 1300 to 1600. Okay, that's obviously UK time. Hold on, let me just put that in there just for anyone joining a bit later. UK time. Okay, and then that one's the New York trading window. So NTW means New York trading window. Okay, so what we will be doing as well is entries will be on the fair value gaps, entries on FVGs, and we will be looking for either a draw on liquidity or a sweep of liquidity. Okay, so sweep or draw liquidity. So there's a very basic overview of the rules that we will have in place. So I do want to emphasize, if there is discretion where you start thinking this trade could go either way, that is not a valid trade. All right. Those are the situations where you think, oh, okay, well, we could go long and short here. Just don't get involved. And that has saved me quite a few times in the past. So I'm going to leave the anchor text in the corner there, so feel free to... Can everyone see that okay? I just wanted to make sure on the stream it is visible.
It is visible. I can see it. If anybody else, confirm in the comments, please, guys.
Okay, if it's not, I can enlarge it. So, like I said at the beginning, I have deliberately cherry-picked a few trades. There are some winners, there are some losers, so this is not a perfect 100% win rate, nothing like that. There's none of this like weird flexing that you see all over social media. So what I wanted to do is just showcase a few trades that I have taken in the past, and also some of the ones that have also hit stop loss. So here's one from, was this the week before last? Okay, so this was on a Monday morning. So, sorry, one of the other things that I wanted to put in here as well is we need a reasonable target. So what I mean by a reasonable target, and I'll use this trade here as an example, is, one second. Okay, we're targeting a 1 to 2 only, nothing more, nothing less. So what I mean by a reasonable target is this is where we would have entered for this trade. This one did not trigger inside the window, but what I mean by a reasonable target is we have a demand zone down here on order block, whatever you want to call it. We have a point of interest down here. What we don't want to be looking at is trying to have a target beyond our demand zone, point of interest, or even some kind of liquidity area. And it could even be like a daily high or low. So we don't want to have our target beyond that, because what will likely happen is if we are going to see a reaction from this POI and we do continue back to the upside, it's very likely we're not going to hit TP. So we have to make sure that we do have a reasonable target. There is a logical reason for that target to be met. All right. If there's not, the trade is not valid. Nice and simple. So I'm going to break down this trade just here. So to start with, let's go into bar replay. Let's just sort of play it along as everything sets up. So what we was looking at first thing in the morning, we can see the Asia session. I like to have the Asia session showing the pip range. So the Asia session was about 23.6 pips. This just gives me a good visual representation that if I do have a trade that requires maybe a 10 pip stop loss or maybe a 5 pip stop loss, I can kind of get an idea of how I'm going to be, how reasonable my 2R target would be. Because if we have a very shallow Asia session that has moved maybe 9-10 pips and I have a stop loss of around about 5 pips, then price action is probably not going to be able to accommodate a target of maybe 10 pips if I'm targeting 2R. So I like to have that on there. If you don't have this on there, it's something that you can measure yourself. You can always just use a scale, just get an idea of how big the Asia session is, or even the London session, and work it out that way. What we're looking at, we can see prices pushed below the Asia session, and we started to close comfortably below the Asia session. This is not performing like a liquidity sweep. We can see that price is pushing below, and we are starting to see price action continue in that direction. So with that in mind, what we start to look at is, are we going to continue pushing below point, I would be sitting on my hands waiting to see, is there going to be a bit more commitment to show a price is pushing lower? If it's not, then I need to keep my bias fluid. So what I mean by keeping it fluid is at that moment in time, I would likely be looking for shorts. And if I was to fixate myself and say I'm only looking for shorts because we've got a candle closure there below that low, or we've got fair value gaps in this POI, if I was to say to myself that's all I'm interested in, I could be missing the bigger picture. We could be missing something else that could drive price maybe above the Asia high. There could be something a lot further up. In this case, there wasn't. I want to make sure that if the market does show a different approach, I need to be fluid and adapt to that. So at that moment, I would be waiting to see, are we going to see further commitment to the downside, or are we going to push to the upside and wait for the market to show its hand? Now we're starting to see a few bullish candles at this point. We can see prices then started to try pushing lower. And then this is the candle that straight away starts to pique my interest. When I see this candle, this is now telling me, right, we've had a little bit of consolidation when we've opened. We've had a bit of indecision. There's been no clear direction at that moment. And when this candle happens, a very nice, strong engulfing candle, we can see, right, there's a bit more pressure, bearish pressure in the market. So as we move forward, we could then see a fair value gap has formed. So one of the other things I didn't put in the rules up here is the fair value gap size and the stop loss size. So let's talk about that now. So we're going to have a minimum stop loss of 5 pips. We're going to have a maximum stop loss of 20 pips.
How did you come up with those numbers?
It was something that it was just more trial and error. So I used replay for all my back testing, and initially what I did was I just took anything with a large stop loss or a small stop loss, and I gathered about a year's worth of data. I think I showed you how much data I collected on the last auditorium.
Yeah.
Like hundreds and hundreds of trades that I've back tested. I'm a little bit weird this way, actually, by the way. I do like back testing. So if anyone that doesn't know me, I love back testing, and I think it's a huge contribution to how I trade these days. So, and what I did start to look at was the common trades that were more likely to play out. And there was just sort of like a nice fine area between 5 and 20. What I didn't want to do is have stop losses wider than 20, because then we would be expecting a much larger move for our target to be met. But likewise, if I had a stop loss smaller than 5 pips, we would start running into some issues with either slippage, slightly wider spreads, and all sorts of stuff like that. So I wanted to keep it relatively conservative. I noticed some people 5 pips is quite small. There's also a lot of other people out there trading smart money that say 5 pips is really large. I've had loads of people comment on that as well, saying 5 pips is massive, and I'm like, I don't care. If you like the strategy, do it. If you don't, I don't care. It's making me money. That's all that matters. So the maximum and minimum stop loss is 5 and 20. Now, if FVG is greater than 5 pips, use center line. That's how you spell center or seconds. Use a center line. So with this trade here, you can see there's a center line on the fair value gap, and this fair value gap was larger than 5. It was 6.4. So we use the midline, okay? So the pending order in this point would then be placed on the midline. We then have our stop loss on the high of candle 1. So candle 1 is on the fair value gap. So we've got, obviously, this is obviously the fair value gap. I'm sure maybe most of you have probably heard of a fair value gap. If you haven't, let me know. I can run through what a fair value gap is. All right, but we've got, it requires a minimum of 3 candles. So this candle here, the second candle, which is going to be the one that's going to provide the gap, and then the third candle is the one that makes sure that gap stays open. So when that happens, if it's greater than 5, we're going to use the center line. So the order would have been placed there, and then we can advance price forwards. And what I then forgot to mention earlier as well is these are the trading windows. So are those visible on the stream here? Can you see the vertical lines there?
I can see them definitely. Yeah. We have a question
Yeah.
actually, if you want
If
to
not-
take it right now or maybe later.
Okay, sure. Question.
Here you can see it in the comments, just open up in the top right corner. Do you mind going over FVG?
Yeah, sure. Yeah, I'll cover fair value gaps very quickly. So for this particular trade, this one did not trigger. The pending order didn't fill, but eventually price did move towards our target, which was fine. If that happens, it happens. I would rather stick to the rules having the entry on the middle of the fair value gap, because then that means I can make sure that my target is reasonable and doesn't exceed where I was trying to aim for. So with a fair value gap, what they are is just essentially like an inefficient point of the market. So some people would define them in certain particular ways and try to provide some, guaranteed logic behind it. But just to keep things nice and simple, we're looking for a minimum of 3 candles. So my indicator here, let me just remove this here. You might be able to see it a bit clearer. So my indicator only shows me fair value gaps inside this window from 8 till 9. It will only show me those. It won't show me any outside of that trading window. So this is what it's representing. We have this candle just here, all right? And then the very next candle has no candle range encroaching that price area before or after the first or third candle. So what I'll do, I'll just quickly draw out a bit more what I mean. So typically we might see, let me just get rid of that midline. So imagine this is a candle. We then have another candle here. We then have another candle about here. So what we can see is, I'll just change this color. So what we can see here is each candle is relatively efficient. Now, if we was to move this, something like, let me just move this like this and move this one over here. So the low of this candle, the low of candle 1, which is this one here, is higher than the high of candle 3. So what this is showing us, there is a gap in price between this low and this high. That also includes the wicks. So if we see a wick pushing up to here and there's a wick pushing down there, there's no fair value gap. It means that price has been inside that candle's range at some point. So quite simply, what we are looking for with a fair value gap is where you tend to see them where there has been maybe a large impulse, more common around market opens. It could be something like around the London Open. It could be around high impact news. They're not only found in those situations, but they could be found more commonly in those areas. But what we might find is also in slightly less volatile areas, like over here, this was during the Asia session, we still had a fair value gap here. So what we're looking at, again, we've got candle 1 here, candle 2, candle 3, and the high of candle 3, so where the wick is, just there, it's much lower. There's a gap between that high and the low of candle 1. So imagine, well, you can draw that sort of rectangular line across there. We can also see there's another one just above. The high of this candle is much lower than the low of this candle, so we have another fair value gap there. So for anyone that's trying to understand fair value gaps, does that make sense? Have I explained that in an easy to understand way? If not, let me know. I can cover it again. I'm more than happy to do so. Okay, seems quiet on that end. Oh, good. Okay, perfect. Yeah, if you have any questions about fair value, I'll happily go over it again. So
I think it was really clear.
Okay, thank you. Yeah, hopefully has cleared up for anyone else as well. So yeah, like I said, this particular trade here, it didn't trigger, it didn't activate. Now, what we need to make sure we are doing is we're only taking trades inside the window. Now, the trade can only activate inside that trading window. It cannot activate outside. If you have a trade that does activate inside the window, it can run outside the window. Now, we do have a cutoff time where the trade will need to be closed. There'll be no trades held open. There'll be no trades held overnight. The reason for that is over recent years, the markets do tend to occasionally provide a gap overnight. And we, especially if we, for myself anyway, I'm usually in bed around the daily rollover. So when we have those swap fees, I'm not going to be looking at the charts. I'm not going to be sitting there monitoring the trade or anything like that. So I don't want to have a trade open overnight. And it is also possible, even if you have your stop loss to break even, that if you have a gap that then gaps beyond your stop loss, you can still lose money that way. So even if you have stop loss to break even, you're not completely safe. But yeah, as you can see, this one would have triggered outside the window, and I'm okay with that. If I miss this trade, doesn't matter. There'll be another trade another day. It could be a trade in the afternoon, could be a trade the next day. I don't care. If it doesn't trigger inside that window, we do not get FOMO at all. We just wait for the next one. And I think that's something that's important for most people to think about as well, is if you see the market going without you, you need to remember the market will still be there tomorrow. The market will still be there next week. It will still be there next year. And it'll probably still be there long after we are, put to the ground. So
How long it took you to realize for yourself?
I'll be honest with you, it did take me a long while to get comfortable with that idea. So as much as I maybe joke about that and sort of make it sound like it's a very simple thing, it did take me quite a few years to realize, okay, there will be another trade next week, tomorrow, whenever. So I do empathize with people that have that, where they cannot bear to see a funded goal of being able to quit your job. That mindset is rushing the process, and the more you think like that, the harder it will be. So yeah, so here's another trade. This was another particular trade that did not trigger as well. All right, but like I said at the beginning, I'm cherry picking some of these trades because some of them do trigger, some of them don't, and some of them do hit stop loss. But I just want to emphasize how these do. Like I said, we wanted to have a reasonable target. So the idea for this particular trade, liquidity from the Asia low. Now, this happened pretty much as Frankfurt was opening. I don't count Asia still being open up until 9 o'clock like some people would. I'm looking at the point where there's more volume entering the market and Frankfurt is opening at 7 o'clock. And I'm also looking at the point where London opens here as well. So we've seen this wick take out the low of the Asia. And then after that, we can start seeing some bullish momentum. Now, there's not really a clear bullish structure until we start to see something a bit more prominent, like this high here being taken. Now, we probably could, if we wanted to, argue that some of these candle wicks here are highs, and, we can say that actually technically we turn bullish from around here. And I would partially agree. I would also then say that it's quite aggressive, but it would probably be more down to your personal risk appetite if you like to be aggressive that way. I like to see some nice, clear, defined structure like this before I start saying, right, now we have turned bullish. So at that point, we can see we have turned bullish from this point here. Like I said, if you wanted to class this down here, I would say that's a bit more aggressive, but at the end of the day, either way, this one or this one, we can now see we've got some bullish momentum. We've got a candle closure there. I love to see a candle closure. I don't like to use wicks because for me, that doesn't show that there's commitment that price wants to stay above that high or below that low. So the order flow so far from this low is quite efficient. We can see there's no fair value gaps down here. There was a fair value gap just before the window opened. All right, just there, and we can see that that was tapped into. So this one would not have been a trade for us to take because the fair value gap was outside the trading window. All right, but this particular one here, there's a very small fair value gap. I would just zoom into that just in case anyone can't see it, but there is a small fair value gap there. Okay, so at that point where we get the candle closures, we've seen the liquidity sweep, we can exit your trade in as much detail as the entry. A lot of people really put so much emphasis on trying to get the perfect entry, which you could get the perfect entry, but if your take profit or your target is absolutely rubbish, then there's going to be absolutely no reason why that target should be met. So we want to make sure we do have something that is likely going to draw price towards it. And in this particular trade setup, there's a couple of things that we can look at. First off, we have the Asia high. All right, so there's going to be liquidity there. Typically, the London session would do the Asia session. We haven't quite seen that as much during the summer holidays. As you can see here, 19.5 pips compared to 24 pips. But this is kind of summer holiday price action behavior, really. But we've got the Asia high that we can use as a target here. We also have a fair value gap here. We have some supply zones or order blocks, if you want to call it order blocks. All right, so we do have multiple reasons for prices to continue pushing up in this direction to a certain degree. So I'm very happy with where that target would be. However, just like the previous trade, we can see that it didn't trigger our order. And I'm okay with that. Again, I am not getting FOMO. I'm sticking to the rules. I'm sticking to the rules to the letter. If the trade goes without me, it doesn't matter. There will likely be another trade tomorrow. Or I also trade GU and UK 100. So there may also be another trade on one of those pairs as well. So this one...
sorry to interrupt you, when you have those kind of rules and you have those kind of mentality now all polished up regarding the FOMO and everything, how many trades do you usually take per week? What would you say? Is there any average?
It really depends. I would probably say the average is around about 3 to 4 per week, and that's if the market conditions are quite good. Now, this sort of trading strategy is probably closer to scalping than it is to like intraday. And a lot of people have the idea that scalpers need to be sat there in front of the charts all day, eyes glued to the charts, and you don't need to be. I quite like scalping, but I also quite like swing trading as well. But for this strategy, I just have those 2 windows in the day. If they trigger, they trigger. If they don't, I don't care. I'll just move on to the next one. But yeah, on a good week, around about 4 to 5 trades, give or take. But there is some weeks where even though I'm scalping, there may just be nothing that meets my criteria at all. And again, the following week, it might be better. But there's also quite a few reasons why sometimes there might not be a valid trade setup. Like, for example, usually at the beginning of the month, when we have things like NFP or maybe CPI, we might start seeing a bit of slower price action before those huge news events hit, especially if you're trading something like pound dollar or euro dollar. You may just start seeing, things a little bit slow until those big news events come out. Especially for this year, because the interest rates have been a very, very hot topic for anyone that keeps up with fundamentals. It's been a hot topic all year round so far. So yeah, hopefully that answers your question.
Yeah, you did. I mean, if it's 3 or 4 or 5 trades, per day, per week, when I compare it to a lot of different other traders, then they usually talk about those numbers when it comes to a day.
Just cut out.
Oh, sorry. You said it's like 3 or 4 or 5 trades a week, and a lot of different traders are doing those kind of numbers per day. So I would assume that your win rate should be...
I'm not sure.
Sorry?
Here.
Can you hear me now?
Yeah.
Sorry for this. I said you have 3 or 4 or 5 trades per week, and a lot of other traders, they talk about those numbers when they're talking about a day. So I would assume that your win rate should be definitely higher.
It's roughly around about 60%, give or take.
Okay, 60%.
It's not like 100%. And one thing that I did struggle with in the past with trading was trying to find the perfect system and looking at those trades that do hit stop loss and trying to make a reason for that trade to have been a winner. And I remember watching a video. Now, I can't remember who the trader was. I'm sure it was like a Wall Street trader, something like that. It was something that popped up. But you know what? That's a good point, because we're going to win some, maybe there are some traders out there that can do that, and if they can, fair play, I'm happy for them. My strategy doesn't have a high win rate like that, but I'm still earning from it, and that's the main thing that I care about. I'm not trying to compete against other people. This strategy just fits me perfectly. So when they said it's just a game of probabilities, if we are going to win some, we are going to lose some, as long Wall Street traders, hedge fund traders, whatever, they lose money. They are not immune to that. Okay, so even the people that are able to move the markets themselves, they don't have 100% win rate. So there's no point me trying to chase for 100% win rate either. So 60% is good enough for me. If it's not for anyone else, that's fine. Have a look elsewhere. That's you just need to find a strategy that fits your personality. Sorry, I might have gone off on a tangent there again.
No. You explained it well. Thank you.
Perfect. Okay. So there is a couple more trades that I'd like to run through. This one is actually a loss. Now, this particular trade, all right, I will explain why I took this trade. So with this particular trade, this was in the New York session. Okay, we have the 3 till 4 window. Again, this is me just being open, transparent. This is like how trading really is. You're not going to win every single trade. So what was the idea for this trade? Well, it's quite a simple one. We've got the Asia low here. Actually, with this Asia low, this is something you may find discrepancies with your data broker. So I use IC markets because that's what my personal capital is on. But what we can see here, there's a really large wick, and that wick is on the daily rollover. Daily rollover, where you get the swap charges, you tend to see spreads widening quite significantly. So that's why that wick looks like that. If you was to look on another broker like Oanda or FX.com or whatever, you may not see that there. So when we have a session low or a high that is caused by the opening candle, I tend to take it with a pinch of salt, and I tend to look more at the high or low that's maybe inside the session. So either way, we have taken this one and we've taken this one during the New York Open. So we've seen a sweep of liquidity. We've seen liquidity being taken at that point. Price was obviously bearish as it did that. It's taken that low. But what do we need to look for if we are going to look for a trade? We either need to see price continuing in that direction so we can carry on trading with that trend, or we then want to see bullish price action. Okay, so if we're going to see bullish price action, we then need to see recent highs being taken. So again, we kind of spoke about this in the previous trade setup, and I think with this one, you could argue again that this is the high that gets broken. We are looking at just a wick. There's not many candles forming that bit of structure, but we do have that wick there. We also have a few fair value gaps here, the last one of which was tapped into, but the rest below were not. That also contributed to the trade failing, but I wasn't too concerned because the end of the fair value gaps had been dealt with. But yeah, we can see price has gone from bearish to bullish. We could then see we've got some nice candle closures above here. We've got two fair value gaps. All right, so we've got two here. I'm taking the trade on the most recent fair value gap. This supply zone has already been tapped into. So when it comes to order blocks, supply demand zones, POIs, whatever you want to call them, I tend to look at them that if they have been tapped into, then those transactions have taken place and they are likely going to become liquidity if price revisits them. To a degree, this did happen here, but it wasn't until much later on. So what we can see, this supply zone, we can see ultimately, the next day did fail, but it did take a little while for that to happen. So just going back to this trade here, we've got two fair value gaps. We're looking at the entry on the very first fair value gap, but we then still want to make sure that our stop loss is on candle one. Okay, so in this situation, we've actually got 4 candles opposed to those 3. Okay, so with one fair value gap, we need a minimum of 3 candles. But if we've got 2 consecutive fair value gaps, we're now going to have 4 candles. All right, so taking the trade on the edge there, we can see it was filled relatively quickly, but unfortunately it did go on to hit stop loss, and this is all part of trading. Now, just delete the wrong thing there. When it comes to why has it done that again? Sorry. When it comes to taking losses, all right, one important thing to ask yourself is, did it fit my rules? Did it fit the strategy? Now, if it does, then you should classify that as a good loss. So what I mean by a good loss is it fits your plan. You did not get FOMO. You did not rush into the trade. It ticked the right boxes. All right, that is a good loss. A bad loss would be a situation where you see the market going without you, you decide to jump in, and you get bit. All right, you then take a really bad loss because it did not fit your plan or your criteria at all. So this particular trade, yeah, it might sound a bit weird, but it is a good loss. It fit the plan and I was happy to take it. Now, the particular target for this one, obviously we had that bullish momentum here. We had already dealt with that supply zone. I was targeting the daily high. So the daily high here is these purple dotted lines just up here. That represents the high of that previous day. So that's what I was aiming for. So that trade, yeah, that one was a loss. So we've had so far 2 trades that didn't trigger, 1 trade that did trigger but took a loss. And let's go and have a look. So there was a couple more days here where there was no trades at all. Price action was too shallow. There was not a lot going on. This one here, I did take a win here. All right. So this one's quite a very easy setup to look at. So this might be one of those trades where some people look at it and think, okay, yeah, I'm probably going to go long there regardless of what the strategy is. But what I'll do, I'll just cover why I took a long here. All right. So first off, if we zoom out a little bit, we can see this news. What was this again? Okay, we had retail sales. So that obviously had a huge bearish impact for the market that day. All right, we had a nice big drop. We could then see the low peaked around here. Now, what I wanted to do is when this low was formed, I'm coming onto the charts at around this point. So I'm then coming onto the charts, looking that this move has happened, and I'm now going to be able to try and potentially catch the back end of it. I don't want to be in the market when this move happens because it could go either way. All right, but what I'm looking at now is where this low is formed, all right? We're starting to see some bullish momentum. Now, in this situation, it's a little bit more difficult to say we are turning bullish, all right? But the main thing that I'm looking at for this particular trade is the fact that we have a lot of imbalance. We've got fair value gap here. This one itself is quite a large one, but this one is obviously even bigger. We have a candle price gap here, all right, but we then also have the actual fair value gap itself in the middle, all right? So we have a lot of reason for price to be drawn back to this. We could see price revisit this and continue back to the downside in the intended direction that this news event happened. Sorry, try to push price towards. All right. But I'm not worried about trying to catch that entire move. I know some people will be looking at it saying, actually, you probably could have targeted a 1 to 4, 1 to 5. I'm not doing that. All right. I'm sticking to my rules. All right. I'm following it to the T. And this is where consistency comes from. I'm not going to be bending the rules for certain situations. So we can see my window is opened here. We have a bullish fair value gap. Now, one thing I did want to be aware of is, could this just be a subtle pullback to, if we was going to be using Fibonacci's, we could be looking at, I think, was it the 3 something level? I can't remember. I don't really use it, but we could just see a pullback to around about here before we ultimately continue to the downside. So I wanted a little bit more confirmation to show that we are going to see probably a more deeper retracement, and we are going to be in a good position. So I then looked to the left. I looked at, right, why did price stop here? Why did it not continue going down? So there's a couple of things we can look at here, all right? With our SMC head on, we can look to the left and say, right, there's something over here. What is this, all right? So for anyone that trades SMC, ICT stuff, all that sort of good buzzwords, all right, we can see that there is a demand zone here. Let me just change the color of this. So yeah, we do have a demand zone here. I've just used the last 2 sell candles before the buy. We could, if we wanted to, just use the very last candle, but either way, all I'm interested in, I'm not trying to find the perfect supply and demand zone or order block, all right? All I'm looking at is, what was the reaction? Where did the reaction come from? All right. And we can see that has reacted from there perfectly. For those of you that maybe don't like the idea of SMC, order block, supply demand zones, all that sort of stuff, this is also a support and resistance level. Okay, so we can look at this and we can see that price has reacted from a support and resistance level. All right, so if we place this on here, we can then zoom out and start seeing that actually price has been quite sensitive around these areas. I don't particularly use support and resistance when I'm trading, but sometimes I will look at it and say, actually, there's likely going to be some kind of liquidity there. Now, would that liquidity be people buying? Would it be people selling? Would it be stop losses? Would it be TPs? Because liquidity is not just people's stop losses, it's also TP, okay? So there might be a reason for price to come down to this level. So I'm not one of those SMC traders that has the ego that SMC is the best. All right, support and resistance still works. All right, and it does. It's very clear to see that you'll see areas like that. So forgive me, I've waffled on about that for a moment, but what we can then see is we've started to see price pushing to the upside. We have that fair value gap here where our entry is going to be. We can see that price has actually reacted from something, all right, and that's given us essentially a catalyst to start moving towards where we're looking to target. So fortunately, with this trade, it did reach our 1 to 2 target. Now, when we spoke about the DRS in one of the other auditoriums, I did show some examples as to why I only target 1 to 2s, and this is a really good example as to why. I've had it loads of times. Most people say, oh, you could have targeted a 1 to 3, and some of those trades I probably could have, all right? But what I don't want to be doing is targeting a 1 to 3 and then having to monitor the trade myself and say, actually, it's not going to go here. I either need to close the trade or trail the stop loss, because the idea of this strategy is to have the order on here, and the only time I'm going to check the trade again is either if I have a notification for TP or stop loss, or I need to set stop loss to break even at 6 o'clock, which is also one of the other rules. All right. And then at 9 o'clock at night is when the trade will be manually closed, regardless whether it's in profit or in drawdown. So those are the only times I want to be looking at the trade. So this one, as you can see, did hit the 2-hour target. All right. If I did try to squeeze more profit from it, it wouldn't have worked out. Does anyone have any questions so far? If I do waffle on a bit, feel free to rein me in.
I don't think you waffled. I mean, everything that you went off a little bit, it was definitely valuable. But people are pretty quiet. We've had some questions before, but you answered them. Right now, I'm trying to check if there's something else. Guys, feel free to write. Most of them are writing if it's going to be recorded because this is good. So that's the idea.
But yeah, so far we've looked at what, 4 trades. 2 of them didn't activate. 1 of them hit stop loss. 1 of them hit TP. So this was just 1 week. I think, was there another trade that week? No, there wasn't. So there was only 4 trades that week that were valid to take on Euro USD alone. And again, that itself would have been 1R, 1% profit. If you're risking 1% for those 4 trades taken, you would have come away with 1%. And that's fine. Some weeks are better. Some weeks might be worse. There may be weeks where you might actually finish the week in drawdown, but it happens. The market's still going to be in the future. So that was just one particular small area where I just wanted to kind of focus on, because I think these ones are really good, clean examples as to why I take very specific trades. And if we do have any kind of discretion where we're looking at the market and thinking, right, we've got a daily high here or we've got a daily low here, the market could go either way. That's no trade. That means there's going to be no trade. So if you find yourself employing a bit of discretion and saying, oh, well, for me, this trade could go this way, then that's you then applying discretion to the trade. All right. If it doesn't tick the right boxes, then quite simply, it's not going to be a valid trade. No. But yeah, in a nutshell, that's kind of it, really.
Yeah. Thank you so much for flew by really fast. Thank you for the examples, and I was really happy you showed the loss because not a lot of traders are that transparent. So thank you for that. Definitely something that we could use to present to the followers and everybody else in the community. I want to say, guys, Chris has a lot of content on YouTube and Instagram, and feel free to follow him over there. Check out his videos. I'm gonna send your links. I mean, you're basically called the same, right? Like in Discord.
Yeah, I think it's SMCFX Chris on Instagram. I've been quite quiet on Instagram at the moment. Like I said, it's the summer holiday, so it's a lot of family time, so I've not really been online that much.
Yeah, if they just heard about you, they can take a look at your evergreen content and then be ready for the next one. I don't have any more questions. I think you covered. I liked the outline of this session where you covered the ground rules and you talked about recognizing fair value gaps and showing the examples of your trades. Don't worry. You said that you sometimes differed. It was okay. It was valuable. So that's mainly from me. I see some people writing comments. Guys, if you like this session, if you didn't like it, but if you liked it, send some emojis, send some fires to the chat, send something. I want to hear confirmation on this. And Chris, if you have any closing remarks, feel free to say.
Yeah, I think the last thing I'll leave with is I do like to try and show the realistic side of trading. Losses are going to happen. I'm not trying to badmouth anyone out there in particular, but there are people out there that will just try and say they've got the perfect method, and then you go and try and trade it, and all of a sudden it's just absolutely terrible. All right, this trade does have losses. There are going to be trades that don't activate, and that's why I wanted to show you these particular ones. That particular week there was 1 profitable trade. All right, but with that 1 particular week, I still finished the week in the green. All right, and that is what I would call realistic trading. It might feel frustrating, all right, but you just need to look at the bigger picture. If you haven't seen the previous auditorium we did where I spoke about backtesting, I strongly recommend having a database for your strategy and just looking at how frequently can you reasonably expect to take a trade each week, and how frequently you anticipate potential losses. Now, you might get to the point where you're actually taking more losses than you would have during your testing. And what I would recommend is maybe start dropping your risk and start to reevaluate your trading journal. And if you don't have a trading journal, start one. All right, you need a trading journal. But yeah, that's what I would probably leave you with.
There's a question actually in the comments, but I think you answered it right now. In your experience, what's the most important 3 rules not to break in trading? Maybe you can just...
Okay, right. So first off, have a trading plan, all right, and follow that trading plan. So everything I've shown you on here in terms of my rules, these are things that I will religiously stick to. All right. I do have my own Discord community, and I do take trades live within that. And it's also a good thing for me to hold myself accountable that if I'm going to take a trade and I'm telling people to stick to the rules and I don't follow those rules that I've just written on that screen, then I'm going to look like a clown. All right. So that's a good thing for one, myself, to hold me accountable because I show everything that I do. All right. But if you are not in that position to have that accountability, make sure you're journaling and be honest with yourself. If you are not honest with yourself when you were trading, did you stick to the rules or not? Right? If you find yourself trying to justify why you took that trade, then it's probably not a good trade. If you can comfortably say that that trade was valid with your rules and whatever, then it's fine. Another thing I would say is don't get FOMO. All right, that's another rule. All right, it's easy to say don't get FOMO, but it's much harder in practice. And I know that talking from experience, it is hard to not see that CPI candle or the NFP candle and think, oh yeah, let's just throw a couple of lots on this and whatever. Just make sure you stay disciplined, have a set period at a time, set period of the day where you can say, right, I'm going to allocate this time of the day for me to look at the charts. If you're distracted, all right, then it's not going to work out. All right. So yeah, I think that might have been about 2, 3, or 4 there, but yeah, that'd be my point.
That's okay. People are asking, is your Discord private or can they join? They can join, right? Of course.
Yeah, it is a closed community. I do have some links in my bio on Instagram. I don't know if it's on my Discord, but yeah, if you find me on Instagram, you'll see there's links to get involved. Now, I do have, like, if you wanted to go more in depth into some of the other trading strategies I do have stuff like courses, but what I do want to emphasize is, so this is where I like to try and be different from a lot of people. You don't need the course that I have. All right. A lot of the stuff I put on YouTube usually is enough. The only time I would say people would need to be part of the Discord community is if they need a little bit more guidance and help in hand. Otherwise, everything I've shown you here, this is pretty much the entire strategy. Anything else that I use for trading, all right, it's all on my YouTube channel. So if you wanted that extra guidance, it's there. But if you're just wanting to learn the strategy, you don't need to join the Discord. I'll be completely honest with you, I'm not trying to just get people to join for the sake of it. If you just want to learn the strategy, you've got it here, and you've also got a lot of my YouTube videos as well.
Okay, thank you for being honest. And
Always.
Well, if that's it. Thank you guys for joining in. Thank you for the good questions. Thank you, Chris. Thank you for wearing TradeLocker shirt. I noticed it. Yeah, looks good on you. Yeah.
Trade safe, everyone. Bye-bye.